Hello everyone and welcome back to my video blog. Recently I have received a lot of inquiries from many of you asking about the state of the real estate market because of the Dow Jones, the NASDAQ thing, and they asked Shawn, what do you think of the market? We will have a real estate market crash. So before I give you an answer, I'm going to bring you back to the history because a lot of things, of this kind, we'll look back to history. So in California, in Southern California especially, I'm talking Southern California, we had two real estate recession. The first one started around the end of 1989 and then last until 1995. Okay, so we have a little bit go up, and then 94 we have the Northridge earthquake that is down again. So by the end of 95 we are on an upswing. Okay, so that at the time is a recession, and why we have recession during that time is the end of the Cold War. We have a big aerospace and military industry in Southern California. Roughly 350,000 people get laid off or have to move their job out to Arizona, a different state. And along the 350,000 people, you have about 1 million people that are affected. For example, a restaurant next to the Hughes aircraft, that closed down. Some of the defense industry, Rockwell's gone. So restaurant got affected, or some other support industry got affected. The subcontractor also got closed down, right? Okay, so that's the recent one, and the most recent one is in the 21st century, but starting in 2008 to 2013, we have recession caused by what? Exuberant and loose underwriting. Okay, so the liar loan, you heard about it. No down payment, stated income and stated asset, and low FICO score. Okay, the people have no credit, like a 580, 570, still can get a loan, as 100% without down payment, without verification of employment, without verification of assets. Okay, and then that period is when it started. It's between 2004 and 2007. There's a lot of a bad policy, bad underwriting right there. And then prior to that, it happened is a lot of people flipping. You have people that are flipping that own 10 homes, just rental, regardless of the cash flow on the property, and just expect the appreciation only. Because you heard me a lot about cash flow. Cash flow is king. Okay, so and prior to that, where all those money coming from? That's all Wall Street money, and then there are also hedge fund money. So they are we have a crash in early 2000, 2001 from the dot-com, dot-bomb. Those money are chasing some other better place to put their money, and there are money that they are putting to real estate during that time frame. So real estate has rise up substantially. That's why to chase all the deal, you have the financing starting to be very loose. It's starting in 2004. That's also a government policy to increase the home ownership regardless. Okay, so Fannie Mae, Freddie Mac, and FHA, those are all government control entities. Has loosened up the underwriting, and Wall Street to respond that one, also jumping in with those mortgage-backed securities that make the crash. So that's the history. Okay, so nowadays I can tell you that the underwriting guideline are very tight. Fannie, Freddie, tied in the underwriting guideline. FHA, which is more looking at the lower quality loan that have a lower FICO score, higher debt to income ratio, okay, low down payment, 3.5%. If you look at those people that have used FHA, okay, from 2016 to 2020, they have built up quite a bit of equity, a lot of equity. Okay, and even for people that have purchased for last year, they have built some equity. So you will see that there will be very few what we call a short sales coming up, because short sale is whenever the value on the property is less than the underlying loan balance. right? So there'll be some, however, it will be not the norm. So if you don't have a lot, there won't be a crash. So that's my perspective. Do we have real estate crash? No. The real estate inventory right now is still very tight. We have fewer sellers selling on the market, and you still have a large population of buyer that want to buy. You know that we have 3.8% unemployment. So a lot of people are employed, and a lot of people get paid very well because of the tight market. The wage have gone up substantially. So still a lot of people buying, you know, for a narrow supply. So you have less supply, the demand is still high, so the price is still here. We will see an adjustment. I will say that we will have an adjustment. We will see less appreciation this year and next year, but the appreciation still will be on the double digit, on the low teens, you know, and then the high single digit, the minimum high single digit. That's my prediction. Okay, so I have a lot of people on the edge right now, waiting for the price to drop before they come back on the market. So I'm gonna give you a perspective. Okay, so I give you a $500,000 loan at 4% is $2,387. Okay, if and compare a 10% drop on the market, okay, is 450,000, and the mortgage payment is still $2,415. Okay, so it's still higher than your what 500,000 because the interest rate is higher. Okay, so however, I have heard from the street that by the end of this year, the mortgage rate will stabilize on the high four. Right now, instead of like 2 weeks ago when we see 5.25% interest rate on a 30-year fixed rate, now you're down to like a 4.9, 4.95%. And I believe that by the end of this year, we'll be around the 4.625 to 4.875 range. And that rate, even though it's higher than the pandemic area, is still around what you have seen 4 or 5 years ago. Okay, so anything is relative. I believe there will not be any real estate crash, and the market will be still chunking along with few inventory, and the appreciation still going up, but much lower. Okay, so I welcome your comments, your feedback. You know how to reach me. Text me. Uh, I'm on Facebook. Okay, so you can make the comments on YouTube too. My video will be posted on YouTube, or me how to get in touch with me directly. Give me a call, email me. Okay, and until then, stay safe, stay healthy. Thank you.